Well, you're probably sitting there wondering how to negotiate the cheapest APR with bad or fair FICO, right? Because a lot of people have told you if you have bad or fair FICO, you will never get a low APR. But guess what? They are wrong. And in today's conversation, I'm going to explain to you the strategy to implement so that you can get an EIN only business loan with no personal guarantee with the cheapest APR, even if you have bad or fair credit score. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you are doing as splendid as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to address the elephant in the room, the proverbial elephant in the room. A lot of people believe that when you have bad credit or you have fair credit, you can't qualify for the cheapest APR. No. Today we're going to talk about EIN only business loan with no personal guarantee, how to negotiate the cheapest APR even if you have bad or fair FICO. Step number one, you need to know what you can negotiate. When we talk about negotiating the cheapest APR, you have to understand that there is a typology of business loans out there. There are different types of loans, okay? So first you have EIN only, business line of credit. So here, what you can negotiate the interest rate, the amount, the term, and the fees. And then we have the EIN only short-term loan. Short-term loan just means that you're getting a loan for 1 to 3 years. You have to pay it back between 1 and 3 years, okay? And this kind of loans are kind of cool, but there are things you can negotiate and things you cannot negotiate. So what can you negotiate? You can negotiate the interest rate, the amount, the term, the fees, the collateral, and the personal guarantee. I'm telling you this, and I want you to pay attention because if you don't know what to negotiate based on the type of loan you're asking for, you're not going to succeed, okay? Here we are trying to be strategic here, all right? The third type of loan is the business term loan. This is where you get a maturity date, let's say a loan term between 3 to 8 years, in some cases 10 years for commercial real estate. So what can you negotiate when it comes to business term loan? You have an interest rate, amount, term, fees, collateral, and personal guarantee. What about a merchant cash advance? Another type of loan also. Now, with an MCA, you actually borrow against your future earnings to secure the financing you need. Here, you can negotiate the interest rates, the amounts, the term, the fees, the turnaround time, very important. How fast you want the cash, right? And also the payment frequency, because a lot of MCA players, the lenders, they want you to actually pay every day. Okay. You also have equipment financing. Here you can negotiate interest rate, the amount, the LTV. LTV stands for loan to value. You can also negotiate the payment frequency, the turnaround time, the fees, and the loan term. Well, what about commercial mortgages? You can negotiate a lot of stuff, also including the time in business in terms of requirement and also the loan to value. You also have accounts receivable financing, the same thing. The only additional element here is the factor rate that also you can negotiate. You have startup loans, you have business acquisition loan. Again, here you can negotiate everything I've said before, including the debt to equity conversion clause. So step number one, you have to know what you can negotiate. Step number two, you need to get legit, folks. When we talk about negotiating an EIN only business loan with no personal guarantee, negotiating a dirt cheap APR, even if you have bad or fair FICO, you got to have an EIN, right? What is the EIN? An EIN is simply your business's social security number. Don't hang up on the number. It's just a number. If your balance sheet is languid, lethargic, weak, your EIN is weak. If your income statement is sclerotic, your EIN is weak. So people talk about, oh, well, I want an EIN business loan because I have an EIN, so I can get a loan. You are so wrong. You are really wrong. When you have an EIN, you need to buttress, you need to solidify, you need to strengthen your company so that your EIN counts. Okay. First of all, you got to get the EIN. Of course, you got to get it from the IRS. Okay. And then once you do this, you need to set up your business in a way that makes sense. You need to have a business plan. Do you have a business plan right now? I'm talking to you. Don't look around. I'm talking to you. Do you have a business plan? You're going around, oh, I have a business, I have a side gig, I have an LLC. Okay. Do you have a business plan? Do you have a plan? Do you have a vision for the future? This is the constellation of important questions you need to answer. Do you have a question? This is a big decision time. Do you have a business plan? If not, I want you to start right now. I want you to start today writing a business plan. If you can't do it yourself, you can outsource it. There is software. You have a plethora of freelance websites out there where you can get someone to actually do it for you. Okay, so I want you to do this. And you also need to have a certification of beneficial owners. I'm just trying to tell you, you need to actually you need to get legit. And this certification of beneficial owners is very important, especially if you want to get an EIN business loan with no personal guarantee. The no personal guarantee is so important because you want to segregate your business's affairs from your personal affairs. You got to get licenses and permits, very important. And please, I want you to incorporate. Don't tell me you have a side gig, you're a sole proprietorship. I don't want to hear that. I don't want to hear that. And neither does the lender. If you want to get an EIN business loan, you better incorporate right now. Right now. Did you hear that? I said now. Now. So forget about being a sole proprietorship. You want to become an LLC, an S corp, a C corp, or an LP. I don't care if you're a single person business. You can have something called a single member LLC, so that you can have articles of incorporation, articles of organization. Trying to set up your accounting, very important, right? You can get QuickBooks, Zero, Wave. It doesn't matter, but you got to have a proper accounting structure, and you also want to take care of your financial statements. Very quintessential. So step number 3. So after you knew what you can negotiate and you got legit, I want you now to get your act together. Okay, so we have another big decision time here. Decision time. You got to ask yourself a few questions that are very important. Those questions are so paramount. A lot of lenders are even surprised that entrepreneurs don't ask themselves those questions. What are those? What do I need the extra capital for? Okay, so you want to get an EIN only business loan, no personal guarantee, but you have bad or fair credit. Okay, what do you need the cash for? Talk to me. Talk to me. What do you need the extra money for? Are you using the moolah for something else, for inventory? Are you using the moolah for expanding? Are you using the moolah to hire staff? Talk to me. How much money are you looking for? This is the kind of conversation you got to have, folks. If you don't have this conversation, you're wasting your time. You're going to get a high APR. If you're trying to get a dirt cheap APR, you need to ask yourself some questions. What does your credit profile look like? And I'm talking about personal credit and business credit. And how quickly do you need the funds? So see, when you ask yourself those questions, you're gradually steering yourself into the right direction in terms of what kind of lenders you can approach. Are you approaching a traditional bank, a credit union, an online lender, an alternative lender, right? So I want you to have this sort of a mental adventure, this sort of analytical journey, so you know exactly what's happening. And you also want to think about how you can get approved. Think about your personal credit. In terms of getting your act together, you need to think about your personal credit, your personal debt coverage, your business debt coverage, your personal debt utilization, your business debt utilization, and your business revenue trend. Do you see a pattern here? When I'm talking to you, are you seeing a pattern? So we have a dual, right? We have a dual analysis here. You have to look at things at the personal level, and you have to look at things at the business's level. So quintessential, so important. And the one thing that's very important also is the business revenue trend, because lenders are more motivated to work with you if your business is trending in the right direction. So they will want to ascertain that your average revenue growth will be fantastic over time. And that makes sense, right? Because nobody will work with you if they feel like your financial statements are languid, or sclerotic, or lethargic, or weak. No, They don't want that. They want action. They want, and you see, the thing here is that even if you're a startup, you can actually convey the image of activity by writing a business plan. There is something called forward-looking statements. Okay, there's something called sales projections. There's something called projected data. So even if you're not making sales right now, but you're able to, and you have confidence in your business, and you can actually convince a lender that you will do better in, say, 6 months or 9 months, that's fantastic. Step number 4, I want you to prepare the right question to ask the lender. There are a few things you need to ask your lender. This is important. First of all, you want to ask the lender if they'll lend to businesses in your industry. Because if you want to have an edge in the negotiation strategy, folks, I want you to stay with me here. We're still talking about EIN only, business loans with no personal guarantee, how to negotiate the cheapest APR with bad or fair credit. First, you need to learn how to negotiate. Number 2, you need to get legit. Number 3, you need to get your act together. Number 4, you need to ask the right question. I want you to ask the lender those questions, each lender, because not you want to shop around, and I'll speak about shopping around later on, but don't ask one lender. No. You want to ask 3, 4, or 5 lenders, okay? Ask your lender, do you lend to businesses in my industry? Do you offer a loan term that fits my business needs, right? Because your business is different from your competitor. So you want to make sure the loan you're getting is a loan that fits, you want a loan that is idiosyncratic to your business. What are the interest rates and the total cost? Please be very clear here, because there are so many predatory lenders out there, so many raptorial lenders out there, that you want to be very clear about the interest rate they're charging you, the fees, the origination fees, the prepayment penalty fees, all those kind of fees. Have it in writing. And what will my payment schedule be? This is a big, important question. Folks, this is the decision time here. Very important. Do you know what your payment schedule is for whatever loan you're currently paying? Is it monthly? It is weekly? It is every 2 weeks? How is that affecting your financial statements? How is that affecting your liquidity statements? Those are things you need to think about, because if you have to make a payment every week versus every day, versus every 2 weeks, versus every month, guess what? This is going to affect your liquidity. This is going to affect your moolah. How much money is coming in, how much money is coming out of your balance sheet, of your statement of cash flows. Okay? You also want to ask the lender, when will my first payment be due? How will I make the periodic payments? How long will the loan application process take? What is your BBB rating, your Better Business Bureau rating? This is important to know that the lender you're talking to has a solid reputation, right? Because if they don't have a stellar reputation, guess what? That's an opening for you in terms of negotiation, because you know you have an edge over them. They want your business, but they're not strong in terms of reputation. You have some leverage here, right? You can say that, may I speak to a few of your current or past customers? And you can ask also if they report your payment history to the appropriate business credit bureaus. So this is those are questions that you might want to ask. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation today about how to negotiate a dirt cheap APR for an EIN only business loan with no personal guarantee and bad or fair credit. And step number 5, I want you to shop around, folks. So important, right? Because you don't want to put all your eggs in the same basket. We all understand. Nobody buys something at first sight. You want to look around first, right? In terms of shopping around, you want to learn your lending options, because when we speak about loans, EIN only business loans for fair or bad credit, or for good credit for that matter, there is a typology of business loans to know about. First of all, you have traditional lenders, you have credit unions, you have regional banks, alternative lenders, you have and you also have online lenders. Very important. So traditional lenders like banks, they're usually stricter on their business loan requirements. You have credit unions and community banks. They offer cheaper loans if you have established the proper relationship with them. Regional banks can be interesting as they offer hybrid solutions between what you see at big banks and what you would get at credit unions or community banks? Do you have alternative lenders? Those who they come in all shapes and sizes, folks. Okay, and unfortunately, among them, you have some great lenders. But also, unfortunately, some predatory lenders, some carnivorous lenders, some reptilian lenders who are just out there just to suck any cash out of your balance sheet. I'm sorry to say it, but that's the truth. When you think about payday loans, when you think about payday business loans, that's what I'm talking about, really. Okay, so it's important for you to create a list of potential lenders. You want to list only qualified lenders, and you want to qualify lenders based on your business's needs, right? You need to understand lenders that will fit your industry, lenders that lend to companies in your industry, right? Understand also that lenders have limits on how much they will lend, and make sure you are qualified. So what I'm trying to say here is you want to do some research here. You want to consider alternatives, and based on your research and by watching shows like this is kind of cool because you are actually building up your case, right? You want to decide which lenders fit your company's circumstances. And so one thing I want to say here is that please don't pick a lender based on emotion. Nobody cares about emotion here. No, you are running a business, you're trying to be profitable, and that's all that matters. You need to know the difference between APR and interest rates. Okay, interest rate is just that. It is a rate, a percentage of interest charged on a loan. APR, on the other hand, includes all origination fees and other fees along with the interest rate. And make sure that every lender has a track record and a history. So you want to find out what the history is and what the lending practices are. Step number 6, folks. I want you to get personal. Did you hear that? I'm not asking you to fight with anyone, but I want you to get personal here. And this is important. If you are sitting there wondering how to get a dirt cheap APR on an EIN only, no personal guarantee business loan with, and you want to get a large amount, I want you to pick up the phone and have a conversation with someone. This is important. You got to visit a branch. Big decision time. Big decision time. Are you borrowing from a bank or a credit union? Are you borrowing from a regional bank or a community bank? If that's yes, then please, I want you to get up right now and go to the branch. You need to sit with someone, okay? You want to have several rounds of discussions. Please be prepared before you go to the interview. Be prepared. Your potential lender will respect you if they see preparation, if they see professionalism, if they see seriousness. That's what we're talking about, right? And please, I don't care if you have a lethargic, you have a weak balance sheet. It's all about the future. It's all about optimism. It's all about having a solid business plan that conveys to the whole world, not just to this lender, that your business is going to come back up. Even if right now the business is just suffering, whatever it is, the business is coming back up. And that's what the balance sheet, that's what the income statement, that is what a projected statement of cash flow shows to the lender. Okay, you want to collect intel on the lender. You want to do some research. I spoke to you earlier about websites as diverse as the Better Business Bureau. You have a Trustpilot. You have a Consumers Affairs. You have a lot of websites out there that talk about the reputation of a lender. And you have shows like this that do reviews about those lenders. You also want to dangle a few carrots in front of the lender, because besides business loans, what else can you bring to them in terms of business? Remember, every lender sells other stuff besides loans, right? They have things like checking accounts, savings accounts, investment accounts, CDs, certificate of deposits, right? Retirement plannings, IRAs, but also, and this is very important, also merchant services, cash management tools, cash flow monitoring connected apps, payroll services, remote deposit services. This is just fantastic. I want you to look right now on the screen. You can see Bank of America. This is a traditional bank. You can see in the category where it says business services, you see the list of services they offer. Do you see that? That's beautiful, right? Beautiful. Let's move on now to a credit union, BECU, the Boeing Employees Credit Union. You see where it says their business banking and the services, cash management. That's another thing you can leverage. What about an alternative lender? You have here Rapid Finance. Basically, you see the constellation of loans that they offer, right? And then let's move to an online lender. You have Blue Vine here. They offer three types of business loans: invoice factoring, line of credit, and paycheck protection. So a few tips to go stronger than conversation: make the first offer and use concrete numbers. Only talk as much as you need to, and you want to ask open-ended questions, and you want to listen carefully. Okay, remember, the best negotiated agreements lets both sides win. Step number 7, folks. I want you to do a counter proposal. I want you to offer a counter proposal. I want you to make a counter proposal. What am I trying to say here? Remember earlier I was telling you about the services that you can buy from your potential lender. You're trying to dangle a few carrots in front of them, right? You're trying to tell them, listen, I would love to do business with you. If you guys can give me a good loan with a good APR, I'll bring you more business. Get personal, get formal. Now, in this case, I want you to prepare a counter offer by writing something called a business loan counter proposal. A counter proposal is simply a request to negotiate or renegotiate a previously made business loan offer from a lender. So, in a counter proposal, you state how much in APR you are willing to pay over many months, what compromise you are willing to make, and why the lender should accept your offer. For example, if the lender says $1 million, APR 17.99%, 5 years, personal guarantee required, collateral required, you might say, not interested. No. I'm counter proposing to you $750,000 loan amount, APR 12.95%, 4 years, no personal guarantee, and no collateral. Yeah, big decision time, folks. Here, does that ring a bell? Does that sound interesting to you? What is a business loan proposal? Because when we speak about business loan counter proposal, we need to understand what a business loan proposal is. It's very simple. It is a document in which lenders want to have more information about the borrower. So they want to have basic information about your business, things like name, entity structure, time in business, current annual revenue. They want to have a brief description of your business model. They want to have the purpose of the business loan you are requesting, the proof that you'll be able to repay your loan, information about any existing business debts, the personal and financial background for business owners. They want to have the professional background information for your management team. They want to have links to online marketing channels in some cases, and they also want to have supporting documents for your business loan proposal. So what I'm trying to say here is that you can actually do a counter proposal with the same type of information. Be prepared for the lender to ask you lots of information, lots of other financial documents actually during your application process, okay? And what I'm showing you on the screen right now, how a business proposal or business counter proposal looks like. You can see on the screen here. We're going to leave this on the screen for a few seconds so you can see here. It has the applicant's name, it has a date, it has the address, the lender's name, the lender's information, the information you can see through the whole letter. So this is how it looks like. Okay, and you have to obviously state what you are counter proposing. All right, this is very important. Okay, folks, this is it for today's conversation. I was actually talking to you about how to negotiate the cheapest APR with bad or fair FICO on an EIN only business loan with no personal guarantee. Step number 1, you need to know what you can negotiate. Number 2, you need to get legit. Number 3, I want you to really get your act together. Number 4, you need to prepare the right questions to ask. Number 5, you want to shop around. Number 6, you want to get personal. Number 7, last but not the least, you want to make a counter proposal. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.